So you want to know what happened with last week's trades, and you want to know what's going to happen with next week's trade. So I'm going to be unveiling the secrets to how you can figure out where the markets are going to go next week and where they were last week in comparison. We're going to go to the charts today, and we're going to have a look at or go over the trades that we did last week and the trades that we're going to look at next week with my vast experience in the markets. Would you believe that we had a rather interesting week, all told? We got stopped out of the US 500 this week. We got stopped out of the Euro Japanese Yen this week. Brent crude oil went in our favor, and the Euro US dollar fell into the doldrums. The Dixie's flying up to the moon, and the DAX has been in a very, very strong position all week. So we're going to go to the charts and we're going to take a look at that, and we're going to see what last week brought us, and we're going to see what we think next week will most likely bring us. But before we do that, don't forget, guys, trading is risky. 80% of traders do lose money, and if you don't like losing money and you don't like risk, then you probably shouldn't be trading. But that said, my name is Rob, for those of you who don't know me, and for those of you who do know me, welcome back. I hope you're going to enjoy this video, and I hope it's going to be beneficial to your trading over the next week. While you're here, guys, drop down to the description, get your free Forex book, and also get your funded trader account. But funded trader accounts cost money, so you're going to have to deal with them on that one. I can't help you with that. But guys, let's go and have a look at the charts. Let's go and see what last week brought us. And then after the charts, I'll discuss the psychology of trading with you and how you can become a profitable trader in the stock market, and why I believe that you're struggling to become profitable in the market, and what really a beginner needs to do to get started. So let's look at the charts first, and then we'll get to that. So let's have a look at last week's trades, and then we can have a look at next week's trades. Now, last week we had a trade on the US 500, which fell short because we had a long trade on it with a stop loss around 57.90, and it spiked down and took the stop loss out. Now, the reason we put the stop loss at 57.90 is because we were looking at a flag pattern that it should break and resolve to the upside in. Now, you could have put your stop loss down here at 56, but it would have been just so far out that it would have made the trade quite small. So we wanted a bigger trade, so we put it up here on the flag pattern, and unfortunately for us, it came down, spiked, took out the trade, and went the other way. That said, you could have got back into the trade and you could have stayed long, because I believe it will still go long, but I'm looking for a better entry on that particular trade. Now, if you have a look at the other one that went bad for us, which was the Euro Japanese Yen, that was another nasty looking trade for the week, where we were short on that because of all these tops. It was a triple top, maybe even a quadruple top, and it hit the top again, and it started going down. It looked good, and it went back, shot through, and took the stop loss out. And that's what happens in trading. So this is now turned into a long trade. Now, be aware that it's a 50-50 game, and these are the things that can happen to you in trading. Successful trades, Aussie dollar, US dollar, short, not bad, looked like a good one. It's still short, it's running down towards the support, and I would say next week it might actually turn around, but just be careful, because it's going to do one of two things. It's either going to break through the support and carry on down, or it's going to bounce off the support and move along long. A trade that we are in, the Euro US dollar, this one has gone against us as well, in the result that we were looking for it to continue on short, and as you can see, it's broken to the upside, and it looks like it wants to break through this level, but it has not. It's created a double top, so it may just give us a continuation to the downside, and we might just be able to save the day. The Brent crude oil trade, that's been relatively successful. What we determined here is that you've got a trend resistance at the top here, a trend support at the bottom. You know, we take them from the daily levels, and that daily level gave us an idea that it's in that range, or that bearish sort of run. Then what we noticed was that there was a supply of money over here where it broke to the downside. Large red candles breaking down. Big supply of money there. It also created what people like to call a fair value value gap in here where there's some money as well. So there's a lot of money lying around this area. Orders, let's say. Human beings that have placed either stop orders or sell orders or whatever the scenario is, but that money is lying there. So then I had a look at the confluence of this trend to the downside on the 4 hour and decided that if it goes back in to take the money in this area, it looks like a really good area to get in on a short, which we did, and it has played out according to plan and given us a couple of nice big red candles down. So it looks like we might get a trade all the way down into the main daily support here before it bounces back up again. So that looks like a reasonable trade. Gold has been a very popular trade this week, and what we're looking for here now, it was long, it's gone up beautifully, and we got out, and now it continued on long and we missed that trade, but now we can get in again as it comes back to take out this demand of money here. There's a demand of money lying right here. If we get a nice green candle coming out of that, you can take another long trade, but I'm cautious on this trade at the moment because there is a head and shoulders that's developed at the top of gold here on the 4 hour, and it could break through that. If the 4 hour head and shoulders plays out, then it's going to go down to the next level here, which is around about 2680. So let's see what happens. Let's see if it starts to push back up, or if it plays out the head and shoulders and brings us down to around the next level at the 2680 level. If it comes down to here, it has actually broken the structure, but it is coming back down to the next resistance level, or the next support level, which is down here, 2670, 2680. So that might be an area where you can get a good trade in as well on the gold. So the gold is looking like a pretty good trade. Nikkei is a long trade as we stand at the moment. Nice long off this trend support, giving us a long trade off there back to the upside again. Nikkei is in a bullish trend overall, and it doesn't look like too bad of a trade. The Great British Pound US dollar, just bouncing back to Forex, does look short. It's been in a bearish trend for quite a long time. It's coming up to test resistance, and it may just give us a bounce down to lower levels. US dollar, Japanese yen has been in a bullish trend for quite a while. It's broken through resistance, popped up, come back to retest, and it may give us another long trade out of there. So that looks like a pretty decent long trade. And of course, the Euro Japanese yen, very much the same. The South African rand has been in a nice bullish trend up here. Looks like it might give us a bit of a long all the way up to the trend resistance. The trend resistance being up at around 1785, 1790. Otherwise, it's going to go to the main resistance at 18. Remember, the markets like round numbers. Euro, Great British Pound is still short, and I'll remain short on that particular product. The US dollar, Canadian dollar is long, whether you like it or not. I know a lot of people have been trying to call this short, but stay away from the supermarket mentality, guys. The supermarket mentality does not work. If something's expensive, it means it's a buy. It means it's good. If something's cheap, it means it's bad. Sell it. It's not like the supermarket where if it's cheap, you buy it, or if it's expensive, you don't buy it. Completely the opposite in the stock market. So this is the US dollar, Canadian dollar. Went up, retested, went up, and it's been going up nicely. Now it's coming back for a retest. In fact, if it comes down to this 138 level, it's probably a good buy. So that remains a buy. Aussie dollar, US dollar, I think we spoke about that. Now that is still a short. The VIX, you wait for it to get down to 15 and you buy. Dow Jones is very much the same as the US 500, very much a buy. And the FTSE has become a short-term sell, but the FTSE remains in this range. It always picks a range and it runs in that range. So the FTSE is quite easy to trade. So what I will do is wait for a buy at the 81, 82 and look for a sell around the 83.50, and that's as simple as it gets with the FTSE. Not too difficult. The Dixie is flying off into the moon, as you can see, not stopping. It has hit resistance. It's turning back a little bit. It might still reject and carry on long. So be cautious, don't jump the gun. South African top 40, also pretty bullish. It's retested, gone up, and it appears to want to continue on its bullish run. So for now, the indexes are looking bullish. The Euro, US dollar, and Great British Pound, US dollar are looking bearish. The dollar is looking bullish. So let's just see how we go. Brent, the crude oils and the oils are looking bearish. Indexes are all bullish, so don't try and buck the trend. Don't try and work against the trend. Have a great trading week, guys. I hope these charts will get you to where you need to be. Now carry on watching the video and find out how you can psychologically make a profit from this. So now you've been to the charts and we know what's happening last week, what's happening next week, where we're going, where we're not going, and all that sort of thing. So I'm not going to go over that again. But how do you become a profitable trader? And I've gone over this a number of times. For the guys that watch my videos on a regular basis, you'll know that I always call the stock market as a 50-50 game. The market has 50% buyers and 50% sellers in it, or it just has, it's made up of buyers and sellers, let's say. So when you take a trade, you're not taking a trade against a bunch of squiggly lines. You're not taking a trade just based on a system you've somehow designed that's now somehow going to make you a profit. It'll give you a win rate. Every strategy, every system will give you a win rate because that's what it's designed to do. But at the end of the day, your win rate is not what determines your success. All it does is determine a win rate. It gives you an edge to determine where you want to put your stop loss, where you want to put your invalidation area, and how you want to make a profit in the market. And you're going to use that system for your trading with the psychological belief that it's going to somehow make you money. But the idea behind it is, at the end of the day, that's not going to make you money. What makes you money is the business plan. And that is simple. What you've got to do firstly is get your mind around the fact that you are going to lose half your trades. Doesn't matter who you are, doesn't matter how experienced you are, how clever you are. These things always remain the same. They always remain the same. They never change, and they're never going to change. You have a 50-50 chance in the market. And that's not because it's gambling or anything like that. That's just how it is. Your system cannot guarantee you 100% that you're going to make a win. It can give you the idea based on past probability that you might do well on that particular trade, but it can't guarantee you that you're going to win that trade. So what you base your trading on is this. You're going to lose 5 trades, you're going to win 5 trades. But how do you make a profit on that? The only way to make a profit on that is to make more on your wins and lose less on your losses. But that's not the end of the story, because it doesn't help if all your losses are a different size. If one is risking $50, the next one is risking $500, and the next one is risking $1,000, it's not the same, is it? It's not going to help you to run with that kind of scenario, because it's going to be a mishmash of wins and losses and different sizes. So what you've got to do, guys, is take a standard amount of loss per trade. So if you've got a $100,000 account and you decide you're going to risk 1% of your account on every single trade, that way if you take 10 trades, you're risking 10% of your account. Now what you do is you say, well, I'm risking 1% of my account every single trade. So that's $1,000. Now what you've got to do is every single trade that you take, you've got to keep it the same, guys. You've got to keep it $1,000 on every single trade. You can't be changing it, because the minute you change it, you sort of deceive the system as well as yourself. But now what you've got to do is, once you have that $1,000 stop loss on every single trade you take, then what you've got to do is work out how you can make more profit. So you want a risk ratio of probably 2 to 1. And if you can get that, perfect. But even if you can't get that, even if you take a trade at a 1 to 1, or you take a trade at a 1.5 to 1, that's okay. But what you've got to learn to do, part 2 of the business plan, is be moving your stop loss up to cost, moving your stop loss up into profit when you're in profit, and perhaps when you get to a point where you see this trade looks really good, of maybe even adding or doubling the trade, then making much more on your wins. But what you've got to do is, when you take a loss, when it goes into loss, accept the $1,000 loss and don't move the stop loss down. Don't try and hedge. Don't try and make your money back on losing horses. It's losing, let it go. Take the loss. When things go into a negative, get out as quickly as you possibly can. As soon as you see that the trade is invalid, take the loss. And if you take less loss than the $1,000, that's fine. There's no strict rule. And if it goes all the way to the $1,000, that's your maximum loss on that trade. What you're trying to do is make bigger wins, make smaller losses. Don't be adding to the loss and thinking, I'll average this out, I'll double it up, or whatever the case, because then you're just going to be, it's just going to turn into tears at the end of the day. It's just going to not work out for you. It never does. It never has worked out. It never will work out, because you get these long crashes, these long disasters, and you just can't recover from that scenario. So don't even try. Just let them go. Walk on to the next trade. It's so important that you get used to doing this. It's so important that you get around to your psychology around this. And I always put the analogy in of, if your horse is 100 meters away from the finishing line in a horse race, and it's coming first, and the bookie says to you, would you like to add to that bet or double that bet? Most of you would take that bet any day. But if your horse is coming fifth or nearly last, and it's 100 meters away from the finishing line, would you like to double your bet? Most probably not. But in trading, you're happy to do that. Why is that? Why are you happy to do that with trading? All I say to you guys is more on your wins, is less on your losses. I hope you have a great trading week next week. I hope all those trades work out for you. And don't forget to come back for the live shows with me next week, where we get together and we talk a little bit about trading. People can ask some questions, we can answer them, and we can make you into a profitable trader rather than a losing trader. Guys, enjoy the rest of the weekend. I hope you enjoyed the video. Till next time, cheers, ciao, and bye.